see this point, which is 87, 89 point, which I was just mentioning just now. It is above 88, so it's close to 89 something, right? That is the last point where it was bullish. And you see this sort of candle which actually happens after the formation of these two candles, that is not a good sign. This actually is usually a sign of a bear trap. Usually price comes down and then starts to move suddenly upwards, so you'll have to be very, very careful with this. However, on the bearish side of things, if the market keeps on falling, then maximum it can go up to is near about 89 or so, which is this mid of the Bollinger Band again, and that will be a retest of that, and where the price can actually bounce back up. Can have. This is the bullish scenario. This is the M pattern that has formed, and we are in a demand zone, and the dollar has recently printed a double bottom here. This is kind of a double bottom here. Okay, so market could be moving higher back into this FCP zone, much higher than the previous high. Remember, there is a gap here as well. Massive gap is there, so market can actually go and close that gap, and in the process of doing so, it can go higher into one of these levels. So I have already mapped all of these targets for myself. I'm going to be following my strategy and my plan of action here. This is what I'm looking for. Unless the market gives me something like completely opposite sign, I'm going to stick to my bullish bias, and I'll follow this plan. This is the possible double bottom. This is going to be target 1 at 93.87867, approximately that. So because the market hasn't started moving there, so situation can change, and I might have to adjust these targets a little bit, but these are all the targets that I'm looking for.